Global profitability does not yet show a recession. In this video, I'm going to show how to apply our Become a Better Investor community cheat sheet. This is Andrew Stotz of the Become a Better Investor community. Let's get started. Let's talk about predictions. Here's Maya Angelou, and she, in the book, in the speech, and America's Renaissance Woman, said this: you can't really know where you're going until you know where you have been. And let's look some more at predictions. Famous Yogi Berra said, it's tough to make predictions, especially about the future. And finally, what I like to say, we are on the cutting edge of history. I don't spend as much time forecasting the future as I do trying to figure out where we are today. And that's what I use my cheat sheet for. This cheat sheet looks at fundamentals of the world, Asia, developed Europe, emerging Europe, and Americas. And then it looks at valuation and momentum and risk. This is the framework of FVMR that I have used for the past 10 years to think about my investing. So let's just look at fundamentals today. Fundamentals mean strong profitability, and that shows that a company is managed well. And of course, when you're investing in a country, in a company, in a sector, you're looking for high or rising profitability. So let's get into the first topic, and that is the rank of 2021 return on equity. Here we can see the return on equity of developed markets is 16%, and the return on equity of emerging markets is 13%, for an average return on equity of 15%. About 60% or so more of the weighting in the world is developed markets. So we can see that emerging markets are weak relative to developed markets. Next, North America and Latin America are strong, and ASEAN and Asia are weak. Look at North America, of course, that's driven by the U.S. at a 20% return on equity. And down at the bottom is ASEAN, where I am in Asia Pacific. And the Association of Southeast Asian Nations, countries like Thailand and Singapore and Malaysia here have the lowest ROE right now. Next, let's go from region to actual countries. Here we can see that Brazil and Turkey are both driven by high inflation, and inflation of 2.5% in others. So here we can see that the ROE of the country Denmark is at 24%, Brazil 23%, US 20%, Turkey 19%, and Taiwan 8%. My point is that Brazil and Turkey are experiencing very high inflation, so it's natural that their ROEs could be higher to compensate. But for Denmark, US, and Taiwan, inflation for 2021 was actually pretty low. Now, this is why I say I'm on the cutting edge of history. This is 2021. You may say, Andrew, I want to know about 2022 or 2023. But the point is, we need to know where we are before we think about where we're going. And this gives us a picture, the most complete picture, because if we look at 2022, where we are right now, August 3rd, 2022, August 5th right now, what we can say is that we're halfway through. We haven't seen the results for 2022. So anything into 2022 is a forecast. And then 3 Asia-Pacific countries are extremely low. We can see Singapore, Hong Kong, New Zealand, Colombia, and then Belgium. And the world is at 15%. These are the 5 worst countries when it comes to ROE. Wow, it's amazing to see Singapore and Hong Kong so low. So what have you learned in this section? World ROE is 15%. Emerging markets are weak at 13% compared to 16% in developed markets. North and Latin America are strong at 18 to 20%. ASEAN and Asia are weak at 8 to 12% ROE. And Brazil and Turkey are both driven by high inflation, and inflation is about 2 to 5% in Denmark, US, and Taiwan. And 3 Asia-Pacific countries, Singapore, Hong Kong, and New Zealand, are extremely low ROE. And you can see a 18 to 24% ROE in relatively low inflation countries like Denmark, US, and Taiwan, and a 19 to 23% ROE in high inflation countries like Brazil and Turkey. So I'm on a mission to help 1 million people reduce risk in their lives, and that mission has led me to create the Becoming a Better Investor community. Join the community and get access to our global asset allocation and stock portfolios, institutional grade research, bi-weekly Zoom and daily Slack discussion, valuation reports of companies you choose, a place to exchange ideas and grow your network, and heavily discounted courses and books, as well as the cheat sheet that we're walking through today. Just go to becomeabetterinvestor.net/community and claim your 35% lifetime discount. Apply the coupon code YT35 for a limited time only. All right, let's go into the change in return on equity from 2021 to 2022. So this now brings into the mix forecasts, and these are consensus forecasts, not my forecasts. We can see developed markets are getting strong, expecting ROE to increase from 0.8 to 17%. Here we can see the world ROE is at 15.4, and the expectations of analysts is that it's going to rise to 16.1. Is that crazy or what? I thought we were in a difficult time, but here you can see that people are not expecting it. They're not putting it in their earnings. So is it that they're not expecting it and they're right, or they're not expecting it and they're wrong? Or could it also be that they're just not putting it in their earnings? What do you think? Let's look at, here we can see the change by region, and Latin America is getting stronger, and ASEAN is starting to recover in Asia, going from 8.3% ROE up to 9.9%. That's a 1.6% increase. Latin America already was high, and now it's going higher, just at a time that America is probably going lower. Now, here we see the countries with the highest amount of change. The big recoveries are happening in Czech Republic, Greece, and Colombia, as well as Norway and Turkey. And here we can see the countries that are weaker are getting weaker. Poland's already got a relatively low, slightly below average 14.7 ROE, and that's expected to go down to 12. Malaysia is at 11, it's expected to go down to 9.8. Belgium's at 8.9, it's expected to go down to 7.8. Finland is at 15.1, the only one that's slightly above average, is expected to go down to 14.3. And Korea is already low, and it's always been low for ROE in Korea. It's going from 11.1 down to 10.6. These are the 5 worst countries for going down. So what have you learned? Well, developed markets are getting strong, expecting ROE to increase 0.8% to 17% ROE. Latin America is getting stronger, and ASEAN is starting to recover in Asia, and big ROE recoveries in the Czech Republic, Greece, and Colombia. And weak countries, Poland, Malaysia, Belgium, Finland, and Korea, are getting weaker. So, personally, I think we're going into recession, but I want to tell you that global profitability does not yet show a recession. What do you think?